How to maximize tax deductions for rental properties. I'm Loral Langemeier, and your guide to walk you through the best tax strategies, because it's what we're known for. Specifically, I want to talk about your rental properties. And if you don't have some, don't go away, because you're going to want to need them. Everyone wealthy, everyone who is a millionaire has real estate. So I was a real estate millionaire in 1999, and I have been doing real estate and the deductions on real estate. So we have a lot to talk about. Specifically, I want to talk about how do you maximize the tax strategy? Like, there's a very specific way to do that. Number two, how do you actually make sure you're doing the right deductions and make sure you're successfully doing those right deductions? Not just every bookkeeper knows how to book real estate. And number three, the costly mistakes that happen all the time that I see when people have rental property and not do them right. So stay to the end, and I will give you massive cost savings by not doing these very simple mistakes. And believe it or not, you're going to hear these mistakes from either your bookkeeper or your CPA. So stay tuned. So number one, the strategies to maximize your deductions for rental property. Number one, and imperative, is you need to be incorporated. Now, most people just throw out an LLC as a way to put your rental property. Depends on the state and depends what you're doing. And one thing, when you do corporate structure, there are even tax law firms who are completely wrong, and they're going to stack you in real estate, meaning they're going to have a holding company that owns the LLCs that own the real estate. You're still one big enterprise all linked together, and it's a house of cards. I call it the domino effect to a lawsuit. So everything needs to be independently owned. So I have a huge team of expert tax strategists and corporate structure specialists that, depending on your state, because those of you in California, remember, because of your lovely governor, have a 12-month squatting right. So literally for 12 months in California, your tenant could not pay you, and you are going to have very little recourse as the landlord. New York, New Jersey, Pennsylvania, there are several states that they're just rougher to own rental property. Not to say don't do it. It's just make sure that if you do it, your corporate structure is really strong, your leases are even stronger, and there are ways to navigate around that squatting. But there are, even Idaho has the 3-month squatters right. So you want to be in a landlord-friendly state, be incorporated. And then the rule is do you put one rental in? Do you put 3 rentals in? Depends on the state, depends where it's at, and really what's the value of the total properties. So a lot of people have a rule of $750,000 to $1 million in one LLC. So that could be 3 or 4 $250,000 houses or properties. So you really got to think through your money rules. And if you don't know your money rules, again, grab the Millionaire Maker, make sure you read through it. Wealth Cycle Investing is really the book where I really get into some details of how do you do that. But corporate structure is number one, and right behind it to maximize the strategies is make sure that your bookkeeper, tax strategist knows how to book the depreciation schedule. I don't know how many times I see in real estate and I'm looking through someone's structure and the depreciation didn't even come through, and you're not even doing enough deductions inside the property. Like, why isn't your phone, for example, owned by that company? Why isn't your vehicle owned by the company? And if you are putting enough hours in, there's another checkbox on the deductions that you can actually be a real estate professional. And that gives you a whole nother set of deductions. So there's so many strategies once you're incorporated and done right in the right state with the right structure and the right amount of assets, then that's when it totally opens up. Like when my son turned 18, he joined a real estate company of mine. So yeah, I went to see him play football in Florida and then in Georgia. I also went to see my real estate partner. So those were all business deduction trips. And yes, we had the formal meetings. We talked about real estate, and in many cases would go out and look at it. So as long as you're following the IRS guidelines, it's a maximum tax deduction. So number two, what are the key factors for really making sure those deductions are successful? Well, first of all, stop going on vacations, go on business trips. So anytime that you visit your real estate or go to another state just to look at real estate, there's very clear guidelines that say you have to do certain things, and you can write the whole trip off as a real estate business trip. So start with a lot of those, what I call day-to-day expenses, your phone, like I said, your vehicle, a home office. What else can you deduct through? Because you're really running a company, and its legal intent is to make rental income. So when you have that legal intent, then you write as much as you can off. And some of you, you're still sole proprietors and you're trying to do your own taxes. So you're only taking about 13 to 30 deductions when the tax code in America is 81,000 pages. So make sure you're really with a team who knows how to maximize the tax structure. I mean, if this is really becoming your core business and you have enough property and you start paying yourself payroll, then with that payroll, you can also go get a Roth IRA. You can get some qualified plans. So you can really treat this like it is your income, your active income for your business. I did that from 2000 to about 2004. Before I did a lot of this education, I was doing real estate tours and mostly buying real estate and writing it all off through business trips and through the deductions that I just shared. You also can go back and do R&D. A lot of tax strategists forget R&D, which is research and development. So even before you buy a property, all the time that you invest in looking and researching properties, learning about it, learning cash flow spreadsheets, reading our books. I mean, if you come to the big table, it's 100% deductible to any of your companies. Doesn't have to be just real estate. So really use the deduction category with the right entity. Now, before I tell you number 3, which is every costly mistake that you're going to make that we've seen all the time, I want you to subscribe to the channel. Click that notification button. I want you here 5 days a week. Any child of yours that is 5 years and older, this is a family channel. And just make sure you go into the notes below and grab my journal. These are brand new learning journals we just put together for you. And if you notice, it actually is all broke down for YouTube. What video are you watching? What was the topic? What did you learn? And what will you do? So you can imagine after 365 days, 52 weeks, 5 days a week watching my channel, this should be your new learning journal and what you're going to be doing to change your life with money and business. And please share. There are so many people in your environment that affect how you behave. Meaning, if you want to be a millionaire, you need to hang out with us. You need to spend time in our conversations and what we talk about, business, money, investing. And a lot of you, you're talking about just random stuff. So be in this community, join our YouTube channel, be here regularly, and share it frequently. And those of you who really want to binge watch my channel, I'll give you $750 of credit towards any new tuition that you want to buy to be in a learning program with us and coaching mentoring. Now, back to real estate and the deductions. What are the costly mistakes that I see over and over? Well, the first one is not being incorporated. So right off the top, you have no protection, but worse than that, you have just lessened your ability to take any deductions. A Schedule C, which is a sole proprietor, simple one gives you anywhere between 13 to maybe 20 something deductions. Not enough when you really want to be really in what I call the corporate life game. Number 2, we see this all the time, is that the actual real estate wasn't even booked properly. It wasn't booked with the right depreciation schedules, wasn't booked with the right deductions. If you actually did any TIs, which is tenant improvements, or actually did any sort of reconstitution to the building, did you have it reappraised? I mean, there's so many things that I just see missing upon the purchase and or remodel of the property. And then the last and biggest one, believe it or not, is to pay it all off, to be debt-free and not stay leveraged on rental income. Now, interest rates are a little higher than they normally are, but we were in the lowest interest rates for decades. And those of you that still have real estate and really great interest rates, why, when debt is just the cost of money, would you pay it all off? I actually just had a client today say, yeah, I just have its rental income and I just paid the whole property off. So you lose the depreciation schedule when it's paid off. And why not leverage, right? Why, if you have a $200,000 property, why not keep 100 in one and go buy another one for another 100 and keep them leveraged at 100 and 100? So spread that money out, get a better use of your capital so you can actually buy more and grow more and then compound the power of the money that you have. So if you have any questions at any point, go to askloral.com, ask a question, make a request. Also, when you call into our office, please have a strategy session with one of our teams. It's a gap analysis. It's based on the 3rd chapter of the book, which really helps you identify where are you, what do you want, and how in an income and asset growth program, which is what we're going to teach you, how to grow your income and grow your asset base, what we could do for you. So grab that strategy session and let's get you started. They also, by doing a strategy session, will be able to give you my Real Estate is Leverage first few chapters of an 8-hour course of me teaching you what I did to become a millionaire in real estate. We'll talk to you tomorrow.